Hi, it's Gail with Traders Help Desk. In this video, I want to go through the tools that are included in both the silver and platinum packages. Now, this is the video for either Multicharts or TradeStation. The tools for Multicharts in TradeStation are exactly the same. And when you purchase either the silver or the platinum package, you get all of our radar screen tools, plus the meter, plus all of the charting indicators as well. So I'm going to start over here on the left-hand side, and I'm actually going to go through the indicators that we have available for either radar screen or the real-time market scanner in Multicharts. The main difference between TradeStation and Multicharts is the divergence tools that we have. We do have divergence available for radar screen and market scanner in both TradeStation and NinjaTrader. We do not have those available for NinjaTrader yet. So as you can see here, it's telling me that on gold I have a short divergence, and on the S&P 500, which is the mini contract, we have a long divergence. So anytime we have divergence on any of these time frames, it will pop up exactly the same. Now we also have a pullback divergence indicator. If we were at an ATR, then it would be highlighted in this column, letting me know that we have divergence at an ATR. The next column in the market scanner is the ADX value and an ADX peak column. Anytime the ADX makes a magenta peak, which means it's trending very strong and now it's going to retrace, it will come up and say ADX magenta peak in this column. And then we know that price is going to retrace. The really good trades actually come off the higher time frames when you do have a magenta peak. So knowing that that peak is coming in is vital to us. The second reason I have the ADX here is anything that is above 70 is considered to be either overbought or oversold. So if it's blue, it would be overbought. If it is red, it would be oversold. So in this case, we see that the ADX on the 3-minute gold chart is at 97. So immediately that tells me that gold on a 3-minute chart is actually overbought at the moment. I would actually be looking for a retracement on the 3-minute chart. So in this example, not only is a 3-minute overbought, the 12-minute is overbought as well. You can also see that on crude that it is at 65, so it still has a little bit further to go before it is considered to be overbought. Whereas on the NASDAQ, we're almost at 70, telling me that we are actually almost oversold on the 3-minute NASDAQ chart. Next to that, I have a THD potential entry column. Anything that is at an ATR or at a congestion dot would actually be highlighted in this column, and it would either tell me a potential long entry or a potential short entry, and I could then go and look at the chart. In addition to that, we have the trend ATR scanner, and we can see the previous bar trend, the current bar trend. So in this case, I know that both are blue, but on the 45-minute, it has went from red to white. That signals to me that it's close enough to an ATR that I can now potentially take an entry as long as we have diverging volume. The next column in the ATR scanner is ticks to the ATR. So in this case, on the 45-minute, I can tell you I'm 3 ticks away from the ATR. We also have a congestion column here, and this tells me anytime we are in congestion. So you can see on crude, the 12-minute chart is in congestion. On the NASDAQ, the 12-minute is in congestion. And on the S&P Mini 500, the 3-minute is in congestion. So this is very important information if you're looking to take a trade at the congestion dot or at the ATR. We know these are the possible markets that we would be able to do that with. The next window that I have here is what we call our meter window, and what it is doing is measuring the RSI values from the higher time frames on all these different instruments. So I have the S&P 500, the Dow, the NASDAQ, the dollar index, crude, and gold. Out of all of these, the one that would interest me the most would be gold, because it's at the light blue line at the bottom. That tells me that down here, when it touched this line, I could actually be looking for long positions on gold, because this is primed for a retracement, because it is oversold at the moment. That's the reason we have the blue line at the bottom. Whereas if it was up at the top at the red line, that's where we would be looking to actually short the market. So this is very instrumental in saying, number one, which currencies or which markets are moving, and number two, if we have any that are overbought or oversold. Now I'm going to move this over for just a moment, because I want to be able to spread out my screen a little bit, because this is why I love the meter windows so much. Because we knew that gold was approaching the oversold area, we would know to go down in time and look at a 3-minute to see if we could potentially have an entry point. And if I spread this out just slightly here, you can see that the trend is blue. And you can see all of these little white candlesticks in here. All of these areas are telling me, hey, look at your volume, because if sellers are not coming in, the market's going to go up. So knowing that gold was oversold, you actually had the potential for entries in this bar, this one, this one. Again, over here, you had potential entries. Again, here you had potential entries, in again here. So all of these highlighted the fact that, hey, we may have an entry here, and we could pick that up very easily by just monitoring where the meter was located at that particular point in time. Now I want to go over the chart indicators. Some of these I have on my chart when you come into the trading room, and others I do not. So the first one I want to start with is the moving average, and you can see this is a white line on my screen, and we also have a blue line. So anytime the fast moving average crosses above the slow, it will turn to blue. When the price bars are closing under the moving average, it turns this dark blue. So you can see as this closed beneath that moving average, we went dark blue, and then it pulled back to the SMA and then started closing above again. That would also give you an entry. You also see that I have these string of blue dots and string of red dots. Those are telling me when price is making highs and when price is making lows. But it also tells me that there is either support, like is shown here, because we have a line of red dots. So that's saying, hey, price has found support here and it's going to bounce up. When you see the string of blue dots, it's telling you, hey, there is resistance here, and price is going to have a lot of power to break this area. Then we have the trend ATR, and that colors the bars either blue or red, depending on whether the ATR is above or below price. The ATR is simply the plus sign that you see on the screen. So in this case, it is below price, so the candles are plotted in blue. If we go back to an area where the plus sign is above price, you can see that it colored all of the price bars red. Anytime we see white, like we did over here, that's telling us we are close enough to an ATR to actually take a trade. The yellow bars are wide bars, and typically they will retrace about 80% of the time. You can see these two over here actually retraced 100%. These two retraced 100%. This one only retraced this last wide bar. Here you can see it was almost 100% retracement. So it's very common to see those retracements, and we do not want to enter when we have these yellow bars because we know they are going to retrace. Now, directly beneath the chart, I have the THD directional volume indicator. Now, this is coloring the volume bars in conjunction with what price is doing. So anything that is in red tells me that price has made a low. Anything that is in blue tells me that price has made a high. Anything that is in white tells me that it is an inside bar. And if it is yellow, that means that the price bar made an outside bar, which means it exceeded both the high and the low of the previous bar. If the bar is plotted above zero, that represents buyers controlled the bar. Anything that is plotted below zero represents sellers controlling the bar. So some people get confused because they see a red bar above zero. That's because buyers controlled that bar. In other words, buyers came in on the low and controlled the price bar. These are typical when we get retracements off of a low. And you can see that on this bar. We made a low, buyers controlled it, they took it back up because they were looking for an area of resistance. They found it right at the slow moving average, and then it comes down again. The next indicator that I have on my chart is the RSI. This is the same algorithm that we use in the meter. So you can see that we're oversold here, we were oversold here, and we were almost oversold here. But the other important aspect there is that as this is making new lows, it's losing momentum because you're making lower highs in the RSI, and it shouldn't do that. It should actually be exceeding this value over here. Directly beneath that, we have the THD ADX. And anytime you see these magenta bars, it's telling you that it is trending very, very strong. When we have a magenta peak, then we are expecting price to retrace back to the ATR. So you can see here a magenta dot came in. You can see that price retraced back to the ATR. Magenta peak here, price retraced back to the ATR. Here it made a double magenta peak, and it actually retraced on the second peak. But you can also see that just like we saw in the RSI, you can see that we're having divergence as price is making new lows. It's losing momentum because you have divergence on both the ADX and on the RSI. Since the ADX is a non-directional indicator, we would expect each new low to have a higher high in the ADX. When we see lower highs, that gives us divergence and also potential entry points into a reversal. Then as we come over, we can also see using the same concepts. Made a magenta peak, retrace back to the ATR. Made a magenta peak, retrace back to the ATR. Made a magenta peak, retrace back to the ATR. This one is flat. In other words, it does not look like a peak. That means it's going to test the high again before it retraces. Now you see that we are actually overbought. We're at 97. The highest that this can go is 100. So I would anticipate that on Sunday, because this is on Saturday, I would anticipate on Sunday when gold opens, it's going to either retrace or it's going to gap down. Then when we go and we look at the 45 minute, you can see we have yellow dots. That are the congestion dots. In other words, price flipped the ATR, but it did it with a lack of conviction. A lack of conviction means that they will come back and test this ATR. If it holds, then they will go back and they will test the high. If it does not hold, then price will go down and retest the low. So in this case, they did go back and retest the high. There was divergence there, so they come back and test the low in gold. Remember, I said I expected the market to go down when the market opens on Sunday. As you can see, as this approached the ATR, price bar turns white, telling us that we are close enough and we're having diverging volume. So that's a good indication that price will come back down and it will test this low. So I hope by seeing this video, you can actually see how comprehensive the THD indicators are. Now, both the silver and the platinum package comes with over 40 hours of video training to teach you all of these nuances in price and in entries. And again, I don't use all of them on my chart every day in the trading room because pretty much I've learned just by looking at the ATR, I can tell you what a slow moving average is and where they are finding support and resistance. Also, instead of having the RSI on my screen, I like to use it in the meter window because I can monitor all the markets at one time instead of looking, okay, is this oversold? Is this oversold? I can actually look here and say, okay, gold is oversold. Earlier in the week, this was a fabulous week to use this indicator. The NASDAQ was overbought. The NASDAQ was overbought. Gold was oversold here. Crude was oversold here. You can see from this that it did make an upward movement each time. You can see that the dollar index was actually overbought here. So this gives me a very quick snapshot of all the markets that I'm trading instead of looking just individually at the charts. One other indicator that I just added to both the silver and the platinum packages is actually the THD Zones indicator. And this is actually showing me intraday where support or resistance is on the higher time frame. As you can see, we had a zone here at 1267, and if you follow that across, you can see that it aligned with our congestion dots. Price came up to it and then bounced down off of it. And each one of these actually held price down if you just look at the action between the zones. So this just tells me watch as price approaches this area, especially when it coincides with an area like this one did, because that is a lot of resistance in that area. Buyers are not coming in. So more than likely, again, just confirmation that the market is probably going to go down and test the low at 1242.2. So you can see all of the combinations that we have here actually give you advance notice that price is going to do something, and then we simply zero down in time to make sure that price actually is doing what we anticipated from the higher time frame.